Welcome to The Explainer. Today, we're diving into a truly fascinating dual-pillar development in the pharmaceutical world. We're looking at Wockhardt's Q1 FY27 performance, and this is the cool part, the concurrent launch of their new antibiotic academy. It's a perfect case study of what actually happens when massive, quantitative financial success meets a qualitative, forward-thinking medical strategy. When you take a rock-solid balance sheet and deploy it into critical medical research, the ripple effects, well, they can literally reshape entire therapeutic landscapes. Let's get into it.
107 crore. Go ahead and just let that number sink in for a second. In the incredibly competitive, capital-intensive world of pharmaceuticals, posting a net profit of that magnitude in a single quarter, that instantly commands attention. It represents a massive, tangible financial war chest. And what does that give you? The ultimate business advantage, strategic flexibility. Look, operating in a global market full of regulatory hurdles and astronomical research costs is tough. So securing 107 crore in net profit isn't just about keeping the shareholders happy. It's about locking in the financial security you absolutely need to chase down those long-term, high-risk, high-reward medical breakthroughs.
Okay, let's dive into this. Section 1. Wockhardt's Q1 financial milestone, impressive growth. So to properly understand the data here, we really need to anchor our timeline. We're looking specifically at the first quarter of the fiscal year 2027. And if you follow the pharma sector, you already know Q1 is historically the absolute most critical indicator of a company's trajectory. It sets the pace, the tone, and most importantly, the strategic momentum for the entire rest of the year. A strong Q1, that dictates a company's ability to commit to those massive research and development budgets early on. If a pharma giant stumbles out of the gate in Q1, well, R&D pipelines are usually the first to face the chopping block. But conversely, starting the year with immense financial momentum allows the executive team to aggressively fund ambitious multi-year projects without a second thought.
According to pharmaceutical reporting from the Economic Times, the company behind this massive quarter is Wockhardt, firmly establishing their financial footing right out of the gate for the new fiscal year. They have officially posted this massive net profit. To fully appreciate this, we got to look at the broader market context entering FY27. The global pharma landscape has been navigating some seriously complex post-pandemic supply chain issues and shifting demands in critical care, right? But against that chaotic backdrop, Wockhardt managed to optimize operations, drive strong sales in key therapeutic areas, and navigate those complex market dynamics to yield this substantial bottom-line result. It's a major headline in the sector and honestly is the foundational pillar of our analysis today.
Let's shift our focus to unpack that quantitative success. Section 2. Unpacking the 107 crore. Massive war chest.
So, we return to this incredible figure, 107 crore secured in Q1 F27. Beyond just a healthy bottom line, a net profit of this size fundamentally shifts how a company operates. Think about it. In an industry where developing just one single new drug can take well over a decade and cost billions of dollars, capital is quite literally the lifeblood of innovation. This 107 crore, it allows Wockhardt to look way beyond the day-to-day pressures of just surviving the quarter. It transitions them into a mode of pioneering. It means they've got the liquidity to attract top-tier scientific talent, expand their clinical trial footprints, and crucially, invest heavily in niche therapeutic areas that their competitors might just avoid because they simply don't have the funding.
So that brings us to the most vital question regarding capital allocation. How exactly is Wockhardt utilizing this momentum? In an industry where windfall profits can so easily get swallowed up by debt restructuring, administrative bloat, or, short-term share buybacks, deciding where to deploy a 107 crore war chest dictates a company's trajectory for the next 10 years. A profitable quarter is a great testament to past decisions, for sure, but how that capital is allocated right now, that is the truest indicator of future industry leadership. Which brings us to our second pillar, Section 3, the strategic pivot, the antibiotic academy.
Concurrently with those massive Q1 earnings, Wockhardt officially announced the launch of an entirely new initiative, the Antibiotic Academy. They didn't just hand in a stellar balance sheet and call it a day. They paired their financial victory lap with a major educational and strategic rollout. And guys, this is a very significant move. The Academy is designed to be a collaborative platform, basically bridging the gap between cutting-edge pharmaceutical research and the medical professionals who are actually on the front lines of patient care. By dedicating a chunk of their newly solidified capital to this academy, Wockhardt is actively investing in spreading specialized medical knowledge. They're making sure that the very latest scientific advancements are actually translated into real-world clinical practice.
So what is it exactly? Well, the Antibiotic Academy is a strategic, pharma-led initiative launched right alongside their Q1 financial reporting, and it's centered entirely around antibiotics. But to understand the true weight of this move,
we really have to ask ourselves, why antibiotics? Right now, the global medical community is facing a silent but rapidly escalating crisis: antimicrobial resistance, or AMR. Superbugs are evolving fast to evade our most powerful drugs, yet a lot of pharmaceutical companies have historically just abandoned antibiotic research. Why? Because the profit margins are usually lower compared to, say, chronic disease treatments. By establishing an academy specifically focused on this field, Wockhardt is taking a real stand against AMR. This isn't just some corporate social responsibility PR move. It's a highly strategic necessity to safeguard the efficacy of modern medicine itself.
Let's move to our next point and see how this all builds together. Section 4. Profits and Innovation, Cohesive Strategy.
And this brilliantly illustrates our dual-pillar narrative. On one side of the equation, you've got tangible financial growth, that 107 crore net profit. On the other side, we have strategic growth, the launch of the Antibiotic Academy. You very rarely see one thrive without the other in this industry. Think of the financial growth as the engine, right? It provides the raw horsepower and momentum. Then the strategic growth acts as the steering wheel, intentionally guiding all those vast resources towards specialized, high-impact innovation in the antibiotic space. Without the financial engine, the Academy is just a nice idea on paper. Without the strategic steering wheel, those profits are just dormant capital sitting in a bank. But together, they create an absolutely formidable force for medical advancement.
So, the crucial point is that posting robust net profits is exactly what empowers a pharmaceutical company to invest in these deeply necessary, specialized medical initiatives in the first place. This marriage of business acumen and scientific focus serves as a really powerful differentiator for Wockhardt. Look, while their competitors might be focused purely on shareholder dividends, Wockhardt is actually leveraging its current market success to establish intellectual and strategic beachheads for the future of medicine. By training healthcare providers and focusing their research on complex bacterial infections, they are positioning themselves as much more than just drug manufacturers. They're becoming indispensable partners in global healthcare resilience.
Which brings us to why this all matters. Section 5. What happens next? Future of medicine. I want to leave you all with a final provocative thought today. How will educational academies, specifically ones funded by highly profitable pharma companies, shape the future of antibiotic development? Think about it. When the biggest financial winners in the medical sector start deliberately directing their net profits into dedicated, highly specialized academies, wow, it has the potential to completely alter how we research, understand, and ultimately develop life-saving treatments. It bridges that absolutely critical gap between commercial success and global health imperatives. It's a profoundly fascinating space to watch, and I really hope our explainer today has provided you with a perfect framework to understand it. Keep learning, keep questioning, and I'll see you in the next explainer.